But the big news today, Microsoft and Yahoo have partnered up to challenge Google's hold on the search engine giant. Here to discuss in our studio just what the implications are, just how successful can Microsoft and Yahoo be in challenging Google. Andrew Frank, he's analyst for Gartner, which is one of the world's leading research firms for technology. Andrew, what Google has about 65% of the search market right now.
That's
How
correct.
big of a challenge is Yahoo and Microsoft as a team?
Well, I think it remains to be seen how much the union of the two can actually move the needle on search. But I think what's interesting about the deal is the way that Yahoo and Microsoft have split the market. Yahoo taking the premium search advertising, Microsoft taking the self-service search advertising, which has really been Google's bread and butter. And so this makes for kind of an interesting pincer move around Google to try to maybe constrain its growth into some of these new, more lucrative markets.
Well, it looks today like the initial reaction from the street is that they don't like it. I mean, Yahoo shares are down nearly 11%. They've been down all morning. I mean, a lot of people wanted to see a dollar amount attached to this deal. $40 billion was a lot of money that Jerry Yang turned down. People wanted a similar amount. Is that your thought?
Well, my feeling is that the street is definitely focused more on the economic aspects of the deal than the strategic aspects, and so it's natural that they would be disappointed that there wasn't a big cash payment up front.
But your thought is...
My thought is that Microsoft and Yahoo are thinking more strategically, and that's why they decided that it was important to structure.
It's not about the payout. It's about the long-term positioning here.
Correct, yes.
Okay. When we look, though, at whether or not this kind of partnership can really move forward, some of that's going to have to face regulatory scrutiny from the EU here in the U.S. I mean, initially the thought was with a Yahoo-Google partnership that there wouldn't be an okay given from the government.
Definitely not. I think that you can expect to see Google raise antitrust concerns, especially given the fact that they backed out of a similar deal for antitrust reasons. And I expect that they'll try to slow things down and use the regulatory process to their advantage.
It's an interesting sort of soap opera-ish quality to the fact that we have Time Warner today. Earlier in the week, we heard that they bought back the AOL stake from Google. It's getting almost like incestuous to have all the same players here interacting. But that percentage stake, that 5% stake, what was that? Because Google must have lost so much money. I mean, what, they spent like $1 billion for that stake, and they got just a few $100 million.
Yeah, I think that it's one of a number of deals where you could scratch your head and wondering what Google was doing. They've entered a number of sort of upside-down deals over the years, but it all kind of fades when you look at their growth and their prospects in the market today.
Well, when you look at Yahoo and how it's changed in terms of executive leadership style, now we have Carol Bartz, Jerry Yang, highly criticized for having turned down this offer in its original form. Carol Bartz, your thoughts? I mean, she says this deal, potentially back in June, she said it could bring in or save them about $500 to $700 million. I mean, how much of a financial win is this? Yeah, that was
the figure I heard was about 500 in incremental operating income, and I think that there, again, you have to look at the long-term strategic aspects of the deal.
But you think she is smart here in terms of positioning for the long-term strategy of the company. Carol Bart's idea to move ahead, Jerry Yang's to say no thanks. You think Carol Bartz made the right move today?
Well, yes, and I think that she accepted a much different deal than Jerry was confronted with.
A better one?
A better one for Yahoo, yes, because I think it allows Yahoo to maintain more control over its search market, at least on the demand side, dealing with premium advertisers, giving them a single solution, even if it's powered by Microsoft technology, and giving up what they were really willing to give up before, which was some of this long-tail search revenue, which they've never been historically very strong at.
Now, when we turn back to Time Warner, another company that you cover, all the focus for the Viacons, the Time Warners, the Googles, it's all about the ad market. I mean, are they in the advertising business or are they in the technology business?
Well, I think they're in the advertising business. I think that they are also in the consumer services business. Maybe third, they're in the technology business, but only to support those other businesses, which is where their revenue comes from. And, you know, I think that it's interesting to see Tim Armstrong as kind of a common denominator in these two deals. Tim, of course, was responsible for a lot of Google's success in at least the Madison Avenue portion of its advertising business, and now he's moved over to AOL to see if he can resurrect that brand as a premium brand for advertisers.
Thank you so much, Andrew Frank of Gartner. Thanks for your thoughts today.